I'm Ian Castle, founder of Microcap Club, home to the best microcap stock pickers on the planet. Since 2011, our members have profiled over 1,300 microcap companies, with over 290 turning into multi-baggers. That's more than one big winner every single month for 14 years. If you share the passion for finding great companies early, before Wall Street and the institutions, Microcap Club is where you belong. Join us.
My name is Sharon, and I work with Panda Fund Capital Management. Just a disclaimer, the company we own, I'm going to talk about it today. We own it in a couple of funds we manage. Just a little bit about Panda Fund. We are an independent asset manager based out in Vancouver, and we manage a little bit over $4 billion assets across fixed income, public equity, and also private equity. I joined Panda in 2013, and I'm a senior equity analyst on the public equity side. My focus is majorly on Canadian and U.S. small cap technology company. At Panda, our investment philosophy is very simple. We look for a good combination of quality and durable business led by capable management team at better or at a fair or better valuation. And today I'm going to talk about one that really fits into this mold. The name is Kneat.com and traded on TSX exchange with the ticker KSI. So what does Kneat do? It's actually a company that provides like a digital validation software for regulated industries, current focus in life sciences. So this is not really those high-flying, very sexy, robot building companies or the defense tech company that building drones. This sounds pretty boring, but as we go along, you probably will find this is actually one of the rare cases where boring can be beautiful. So Kneat is a company that with a market cap of 500 million, and this is actually prepared last week because I need a 2-day compliance turnaround to get this approved by my company. So if you think about this, a 20-page presentation needs a 2-day turnaround with compliance. How much burden a pharmaceutical company would face if they actually are manufacturing some drugs that are dealing with people's life. So that's why I'm saying, this is not exciting. It's not one of the sexiest areas you want to focus on, but it works. We like this opportunity, but of course there are people or investors out there that don't really like this. So that's where the market actually exists. So because Kneat is a very small vertical SaaS company in a very niche market, validation, and most people probably don't even know what validation means. And so people might think this is too niche and does not have a lot of runway. Because we see it differently, as you probably could tell, because I'm standing here telling you about this opportunity. We actually, from our own research, we actually think this company has a pretty long runway. It's actually a category leader in a very large, unpenetrated markets. They can expand to adjacent areas next to validation, into more quality management systems, or they can actually expand it to more adjacent sectors other than just life sciences companies. They actually are demonstrating with their recent customer wins that they can actually do this. We can go through a list of customers they won recently, and you can see these not actually like pharma companies. They have like a bunch of medical devices companies or food safeties or even CPG companies there as well. And these companies have never really been profitable. The company was founded in 2006 and went public on the TSX V exchange through a RTO. So people might doubt whether they burn a lot of money because they invest a lot into the R&D and trying to build a first-grade platform. So people might doubt their ability to see whether they can ever become profitable. From our perspective, we actually think the path is there, and there's real operating leverage for this company. Let's look at some numbers first. So 77% annual recurring revenue CAGR since Q1 21. That's elite SaaS growth. If you look at the universe of SaaS companies, whether it's in the US or in the Canadian market, on the median growth probably is around 12% to 15%, and this company is able to grow an impressive 77%. And it is a category leader in a large unpenetrated TAM, and the TAM, they actually have a pretty large addressable market, like outside life sciences and outside validation. Even if we only talk about validation in the life sciences sector, it's over $2 billion. And I'll go into details explaining what actually is included there. And also, the retention rate about this company is amazing. It sits north of 150%. The typical median retention rate for a SaaS company is probably, like the top ones, probably is around 120%. So this is actually means their existing customer buys their products and services 50% more than they already have every year. And if you think about the compounding, it's just astonishing. And the valuation is not necessarily that cheap, but given where the stock is today, we're actually seeing more upside from here. So what is exactly validation? If you ever have some friends working in life sciences or pharmaceutical companies, validation means a lot of paperwork. You're thinking of like binders, signatures, and re-signatures, and auditors probably living their best of lives there. So the space is very slow to move, and the majority is still using a paper-based system, or it's a hybrid system. So where basically the workers will have like a pile of paper, and they scan it, and then they save in a document management system. So the document management system is only, to store the type of document, and the data is there actually it's static. It's not really talking to each other. If you change something, you have to go back and fix everything. And the worst is if you are out of compliance, the consequences can be very, very bad. You're not going to continue your operation, and there's like huge amount of penalties for these companies. So what Kneat does is they actually replace all these paper maze and change with a digital platform where the data is kept in the central places, and all the data is dynamic, talking to each other. If you change one place, you could change all through all your documents that contain that data. It's auditor ready, so it's also real time. So for auditors that don't really want to come on your site, they can actually remote audit. This is very popular during COVID. And it has a global presence, so it's not just for the US or Canada. It's actually wherever you have manufacturing sites, you can use this platform. So most of the top 20 pharma companies are actually using Kneat. And they have the logos of the top 20 pharma companies on their website, so you can take a look there. One of their things is configurable, so they are a no-code configuration. So basically, you don't need any IT resources to do this. The way the paper, basically just move the paper process onto the monitor, so they don't really need to change the way how people used to do things. And that's very easy for people to deploy this and buy them from the people who are actually working in the field. They actually buy into this concept. So now if we come to the TAM question, so this is provided by the company, but we like to validate it as well. So initially, they claim they have a 600 million TAM, which only include the manufacturing sites for pharma companies in Canada and US. And now they expanded the TAM to the total addressable markets to 2 billion, the smallest bubble there, which include life sciences sector, and not limiting just to pharma companies, but to their suppliers, to their downstream. They also have a logistics company as their client, because if I'm a pharma company, I'm using Kneat for all my validations. I wanted my suppliers to use Kneat as well to make sure everything they supply to me are validated in the way that I like them to do. if we are a little bit more adventurous, so can actually go out of the life sciences and go to go out of the validation and go into areas adjacent to validation in the other areas like manufacturing, like quality management, or the other sectors. As long as they're regulated, there's a lot of compliance requirement. Kneat can be applied there. So who are they competing with? They compete with some generic software which does the document management systems, like I just mentioned, for the hybrid kind of situation. And there are vertical software that does this. So Veeva is definitely the elephant in the room. It's a multi-billion-dollar company, public traded. They are very famous in the life sciences sector. They have a bunch of products like a CRM and QMS, quality management systems. But they only started to have a validation product in 2021, and they have not really gained too much traction because the existing incumbents like Genesis, which is another large competitor, they already have most of the logo, like the biopharma logos, using themselves. So it's very hard to go in there. So Genesis is their largest competitor. It also provides the end-to-end workflows for all validation needs, but their technology is a little bit behind, and their user face is not very friendly to use. Anecdotally, Kneat has been winning customers from them. They compete in the RFP, but Kneat win more. So I've already touched upon their differentiations, like they provide end-to-end validation. It's not just a point solution. It's configurable, and it's easy to use and quick to deploy, no coding. And we have talked with quite a few industry experts, like an ex-employee of Veeva and 2 of Kneat's partners. And all the feedbacks we got is very positive for Kneat. This seems to be the proven market leader. So they literally have near zero churn, and I think the moat is actually deepening because the more processes you have with Kneat, it's more embedded into your company, and it's very hard to replace. And more importantly, because this is for compliance and regulatory requirements, the data you have to store for a very long time. So if you have all your data stored and managed by Kneat, it's very hard to replace. This is like if you want to renovate a hospital with the lights on, so it's quite difficult, very high switching cost. This is probably one of my favorite slides. So, it's a very long sales cycle to actually get into a pharma company to convince them this, your software provided everything they need, and it's going to help them improve efficiency. So the sales cycle is long. It's probably over 18 months. But their sales team is very efficient, and thanks to their land expand strategy, because expansion within existing customer base is a lot easier than getting a new customer. So they have, we measure this by the net magic number, which is basically your incremental ARR divided by your sales. So you have like $1 sales dollar spent, and you got $1 of ARR, incremental ARR, and that's a dollar ratio of 1, which is the top quartile companies, SaaS companies. And that's translate into a very good unit economics. If you measure that be the lifetime value divided by the CAC, the customer acquisition cost. So for each customer, it takes about 6 to 2 years to fully scale, and you start like with one site, a few users on one use cases, but you can then expand it to multiple sites, multiple use cases, and this is they have. One of their customers, Merck, and they've basically is fully penetrated there. They got 12,000 users there for their 27 sites, and the revenue is multi-billion. So their top 10 customers actually account for 50% of the revenue, and on average, 2.4 million revenue per year as of 2024, increasing from 1 million. That just shows you the dynamics of the expansion. Okay, this is a list of their customer wins I just touched upon, and this is actually not just pharma companies, but across many different type of companies like medical devices and etc. We do think the gross margin expanding with the mix turns to more recurring revenue, and the revenue is actually growing more than the operating expenses. So I'm running out of time, so I'm going to be running really quickly here. So we're going to see the operating leverage kicking in pretty soon. Those graphs shows nice trends. So the valuation, I don't think anyone can measure this value company by just one single magic number. So the approach we take at Panda is we basically come up with various scenarios, and we assign like a probability for those scenarios, and that within that framework we got an intrinsic value, which is like about 50% upside from here, and we also look at the private market valuation to see how what exactly people are paying for buying these type of business, and the transaction multiples are between 3 to 6, and for Kneat, right now my implied value is about 7 times, which is quite reasonable, I think. And the management is very experienced, and they have 3 founders. Together, the 3 founders and a couple of board directors owns 22%, and all the 3 founders are still taking important roles in the company. They're well incentivized and very careful about the stock grants, so we don't see a lot of stock-based compensation. I don't think the CEO idea is built this for a quick exit. So sometimes you're really taking comfort to see operators actually are eating their cooking, right? So I can't finish this without talking about risks. So the risks are the competition is there, as we already touched upon that, a regulation can shift. The customer concentration is, the percentage of revenue have come down from over 60% to 50% now, but it's still a bit more concentrated. So the setup, I think, is more like low risk, low medium risk, but high conviction. Just to wrap it up, we think this is a very good business, high quality, early stage, still have a lot of runway. We call that an emerging compounder, and this is exactly where we want to be invested. If you have questions, I'm available, and Kneat is going to present tomorrow as well. Thank you.